Jacqueline now. She came here to work on Capitol Hill years ago. We stayed friends. I think I want to say she's in Jackson Hole. Her and her
Oh,
husband came like a year ago. She's like, I want to link up. I want to see you guys. I was like, I've got babies. I have no free time.
All right, we are live. So welcome back. It's my Friday. I got Emily Lopez back on, and we got. I want to let everyone know. No one's gonna get banned here today, but we do have Aaron Foster returning. So welcome, man. How's it been? Happy New Year.
Happy New Year's, my friends.
Yes, you're one of my requested guests all the time, but you're so busy right now, right? What's going
You're
on with you though?
so full of shit. Oh my
I,
god.
I am
You're
not.
so full of shit. You're
I am
breastfeeding.
not. I am not lying. I am being serious. Everyone always asks, "Where is Aaron?"
Aaron's got babies. Aaron's tired. Aaron woke up 4 times last night. I got more sleep at the firehouse than I do in my own house. I literally go to work to get rest.
Yeah, that's
I'm like
usually how.
stabbing, shooting, no problem. Car wreck, no problem. Come home to the kids and I'm like, oh God, please be easy on me.
All right. Well, so yeah, I think there's a lot of stuff going on in the news. Tyler will be joining us also from Maltese Mortgage, but there's been a lot of talk. Trump's been talking a lot about a lot of things to maybe make housing affordable. Even Emily's recent video was talking about forbearance and other things happening in the market. But I want to dig into kind of what Trump kind of just talked about. Was it yesterday? I believe he was talking about banning institutional buyers, or so a lot of people are talking about a housing crash. So do you guys have any thoughts on that? So Emily, what's your thoughts on that?
what do you mean a lot of people are talking? Just like the same talk, or now since he made that announcement, people are talking about it more?
It is all over X. I mean, that is the big push. You know, everyone is talking like this is a long time coming. It's needed. It's necessary. It's going to bring down housing prices. It's a good thing. But do you have any thoughts on it?
I think people are using the word crash lightly. I think that we are seeing I think maybe a month or two ago, I posted a video and I called it a standoff, is what I feel like I'm seeing as a real estate broker, where we are not seeing a situation like before in the 2008 area where there's a ton of people. There are some people that are upside down. There are some people that did forbearance and have consequence of that. But a lot of these sellers don't want to sell for a lower price, but they could. They either could sell for less and they have the equity, or they could sell for less and they could bring a little bit of money into closing, but they don't want to because their neighbor's house down the street sold for really high 2 years ago. And so I know there's different things in different markets. I mean, I'm seeing a lot of people, when you see these big investors who bought a bunch of short-term rentals or things that the numbers only made sense as short-term rentals and they can't long-term them and they're in weird areas, so they can't get rid of them. I think we are seeing things like that. I'm hearing a lot of people struggling in Florida, places like that there is a lot of vacation rental type purchases. But as a whole, we still don't have enough houses for our growing population. And so, yes, in micro markets, there may be micro crashes, but as a whole housing economy, there are still home buyers that want to buy. The problem is affordability. There's not an oversupply. It's just that buyers and sellers yet are not willing to come to a balance. When sellers are willing to adjust down to the realities of our new declined market, homes are still selling. So I think we're seeing this standoff where buyers are saying, I'm not paying those prices now. And sellers are saying, well, I don't want to go that low yet. And until something gives, those transactions are not happening, but buyers still want to buy and buyers still need homes. And so I don't see a crash. I just see it's a correction for sure, because when you have 2% interest rates, that creates problems economically, but I don't think it's going to crash. I don't call it a crash in my mind.
Well, welcome, Tyler. You were busy, but thanks for jumping on and making
you got
an entrance.
the PT.
Yes, us old guys need that right now. But yeah, it's been a while. So how you been? Happy New Year, man.
Good. Happy New Year to you too. You've been very good.
Yes, I'm glad to get you and Aaron back on. It's always entertaining when the three of us are on. And but I want to let everyone know Emily's YouTube channel is also streaming right now, and also the First Responder Financial Freedom channel, where Aaron and Tyler are a part of. So go check that out. Subscribe there if you haven't yet. But you, Aaron, so I know you like to stir up a lot of things on social media. But what is your thought about Trump's big news about banning institutional buyers?
I think no matter what anything Trump says, it's gonna cause controversy because it's Trump. I mean, he's a polarizing individual, and either with him or against him, it seems like. I think a lot of the things that people say, no matter what he says, it's going to be people have negative connotations just because he's saying it. It could be a Biden that could have said it, it could be Obama who said it, but because Trump is saying it, now it's an issue. You look at the last time they talked about mortgage-backed lending or mortgage-backed buying, quantitative easing. It was 2009, 2014, and 2020. And people are like, well, if they do this, it's going to do this, this, and this. I'm like, well, why is everybody all of a sudden an economist? And why didn't you have this economy vision or economist vision, during those years when they decided to do the mortgage-backed servicing? Like, what's the difference now? It's just because Trump said it. So I think Emily hit a couple good points. When you try to paint the United States as a one broad stroke of a brush for real estate, it leaves out the micro and macroeconomics. So like, obviously our markets are starkly different. So I can go block by block or neighborhood by neighborhood in this city, and the market's going to be very, very different. I can go to Baltimore, even parts of New York, and go neighborhood by neighborhood or block by block. So people buy in this block, but they won't buy in this block. So it's hard for me to say like, okay, these condos in this city will do well. Well, these condos in this city on this block will do well, but these condos in this city on this block will not, or townhouses or row houses. I was actually talking to one of my friends that does condo conversions. So in DC, it's real hot. You buy a 3-unit building, dig the basement out, pop the top. So you turn that 3-level row house into a 5-level condo conversion. So now you have 5 condos. They try to do the same thing in Baltimore, and it's failing just because the cost to acquire a row house up there is super cheap versus condos in DC can be $1 million all day long. So it's just, I think micro and macroeconomics are going to determine the crash. And when we say crash, 2008 crash is not going to happen again. So you might have a pullback or correction, as Emily stated. But a correction is not like a 20 basis point drop. A correction is going to be like, it might adjust in certain areas and it might not. But there's a high demand, and Tyler will get into this a bit more. We talk about this every time that we get on a podcast, is you hit a certain point drop and then 1 million people jump back into the market to purchase. So I'll let him talk on that because that's kind of what I always lean on him for. But when you look at the real estate market, you can't do a broad stroke of a brush just because it's not realistic.
Well, before we get into, I think you guys are both kind of maybe touching on some of the recent news he mentioned about Fannie and Freddie buying mortgage-backed securities also. So we can dig into that a little bit after. But his initial announcement was about banning institutional buyers. And I'm not sure in your guys' market, like you touched on, each market is specific. But do you see a lot of institutional buyers in your area? And like I said, I see Tyler shaking his head. So what is your thoughts on him? Is this his headlines, or would this help affordability, you think?
Yeah, I mean, he like Aaron said, I think I forgot what podcast I was listening to where somebody who was close to him knows. It's like, I think of it as like he's throwing stuff against the wall and like seeing what's going to stick, right? And I think he's looking, okay, is this going to help? And why is he saying it? Because their affordability is a problem. That Emily touched on it. I think we're below 17% affordability, which is a huge number in California specifically. That's a big deal, right? So he's seeing, okay, is this going to work? The fact is, and I don't know if you guys already touched on it, there's only 1 to 3% of the entire housing supply is owned by institutional buyers, and it's now trending closer to 1%. And I was at a meetup last night with somebody that I 100% respect and trust, Bruce Norris. I mean, the dude's legit. I mean, he's been around forever. He's called a lot of things. He called the crash in 2007 to 10. And he was mentioning this, and he said that they've already moved on from buying existing single-family homes, and they're all buying land and doing build-to-rent. He's like, so I don't think it's anything. I don't think it would have any meaningful effects. I think those years that we all experienced a ton of run-up benefit a lot of us who own property. But he was even explaining last year, it's kind of like a lost decade for us, right? We experienced maybe a decade's worth of appreciation in 2 years. So we're trying to catch up, and people still can't, a lot of people can't afford to buy. So I think it's 100% headline chasing, kind of like last night when he announced the $200 billion. It was like, 430, boom, let's see what happens to the market. And this morning I got up at 4. Mortgage-backed securities had improved by 50 basis points, which was huge. and then now it's gone down to 30, but that's still pretty impressive. So we'll see how rates react and see if that helps affordability. But I learned something interesting last night, that we always assume that when rates go down, that's going to increase housing prices, and that's not necessarily the case. So yeah,
touch on that a little bit. Touch on that about housing prices not going up if rates go down.
Let me pull up my notes from last night, because I'm a nerd. Because he caught us. I was like, oh, he's like, who here thinks when rates go down, housing prices go up? I'm like, oh yeah, absolutely. Let me see if I can find it. And while I'm doing that too, one other thing that I did see that I had pulled up here, the peak of foreclosures in 2007 through 10, I think we were at like 150. Let me pull it up. It was a crazy number, I thought too. Trustee sales, 145,000 in 2009. We are currently sitting at 3,600. Massively different numbers. So I don't know if we're going to have a huge glut in foreclosures, but let me look it up, Mark, and I'll give you an answer in a second as far as that goes.
So usually a pullback, though, like if you see a pullback or a market adjustment or whatever you want to call it, it kind of affects different areas. So like, we'll say Poughkeepsie, Idaho, small town, 300 people, it's going to affect there where people are leaving. It's going to have a dying community versus like DC. We're very insulated because it's a federal location. We have a lot of people who have to be here. Same thing for New York. Like it's not going to affect every area different. Like you might go out in the suburbs or out in the country outside the suburbs, and it might affect that area more than, someplace it's insulated like DC or LA or, the major cities. Like how did Honolulu and Hawaii fare in the 08 market? Did you guys have a big crash or just kind of stay like a little crash?
Yeah, we didn't really notice anything. We're kind of a very unique market, and there's a lot of foreign money and investors coming this way anyway. So for us, it didn't. Honestly, I didn't even notice. I mean, for myself, even just the economy wise, it doesn't really. We don't hear it very much out here. In a sense, we're kind of in our own little bubble, so we're not as close to things as other areas. So it just it doesn't impact us too much.
You guys are one of the top places to retire to, apparently, in the country.
Based on what?
Low taxes, no taxes.
No, well, we have the highest combined taxes.
Mm-hmm.
So there is if you are wealthy, you want to retire here just because of the weather, and there is a lot of favorable like financing for houses. So people buy cash and then they can take very favorable HELOCs on them and things like that. But as far as overall tax rate, I think we are the highest. I believe it was the last report I saw.
So what Mark is saying is, don't come, we're full. Go to New York.
No, I'm saying if you have a lot of money, it is a great, people like the weather, they don't have to deal with a lot of the winter months and things like that. So it is beautiful. It's just you got to have a lot of money typically to want to retire here.
I didn't realize how expensive Wyoming was, where Emily is. I was looking there out of curiosity because we have guys from DC retiring going all over the country. Like my one buddy's going to South Dakota. But I looked at Wyoming out of curiosity. God bless. Y'all are really expensive in Jackson Hole. Like nothing's under like $1 million. Good
That's
Lord.
not really
Jackson
Wyoming.
Hole's nice.
Yeah.
So what about you, Emily? I know they're talking about Wyoming. Is there a lot of institutional buyers in your area?
No, Wyoming is so small. And even like Aaron was saying, Wyoming, Jackson, people will joke Jackson's not Wyoming. Most of the people that are from Wyoming that lived in Jackson, unless they have incredible family wealth, like they've been pushed out of that market. They can't even live there. It's like billionaires who have second homes there. And then now they're starting to invest in like Pinedale, Cody, some of those areas they're pretty like that. Like that doesn't look like that where I live. I'm more of a high desert climate. And so there's these areas that kind of look like that. And even really wealthy people can hardly afford Jackson anymore. And the people there are snotty. Like most people that are true Wyoming want nothing to do with Jackson. So it's really, really shifted what it used to be from the people I know that used to spend a lot of time there. And so that's not really that's insane. That's an insane market. So the rest of Wyoming is pretty affordable, I would say, relative to the rest of the world. And we don't have like a state income tax, stuff like that is really nice. And then no, institutional investors, I mean, maybe, but not where I'm seeing it. I don't see how it would make sense for them to come. We're such a small market. Maybe if they're buying land or something, but I don't think they're doing anything residential here that I'm aware of.
I think this would be the big question that a lot of people have when it comes to Trump's announcement of banning institutional buyers. It's hard to assess what ending institutional buyers from buying single-family homes will actually do until the actual regulations are outlined, and what is, I guess, an actual institutional buyer. I think that's the biggest questions. Tyler, did you find what you're looking your notes or?
Yeah, it didn't give the specific reason, but he used the 70s as an example, and interest rates in like 79 and 80 were at 12 to 14%, and housing experienced a lot of appreciation in that time period. So his point was they don't always correlate. There wasn't like a definitive thing. But like you would think at that time period when rates climbed up, that the rates that property values would have gone down, and that's not the case. They went up as well. So he's saying don't expect interest rates to be like our saving grace. Like, oh, as soon as rates drop, everything is going to be magical. He doesn't think that's going to happen.
So I looked it up while Tyler was talking, and it says that oh shit, I just closed the window. Hang on.
Are you institutional investor definition? Is that what you're?
Yeah.
So this is from Cornell Law. It says an institutional investor is an entity that manages their clients' investments. Investment banks, insurance companies, and mutual funds are examples. And then another one is just pools of investors. So I think it potentially could be like a lot of it. I think we already said insurance, didn't we? Yeah, insurance companies. So that's like from Cornell Law.
Yeah, so what I see is private equity groups, public traded REITs, REITs, landlords who own a multitude of properties, and Wall Street firms that accumulate large housing portfolios for financial gain. It also targets firms like Invitation Homes and American Homes for Rent, whose shares fell after the announcement. Blah blah blah. There's a whole bunch of information here, but like I think it's not for the mom and pop as much as it is for people who are buying a multitude of homes. Like, but if you look at this, like we talked about this on our podcast, I think 2 years ago. So when they go after institutional homes, it's usually a specific market. So like we'll just say I don't know, Street, Maryland. It's a small town. If they can control 20% of the market, they control the entire market. If they wanted to raise the prices and sell it off in the shadow company offshore, they can force the appreciation of the property, so it prices out everybody. So like they try to control specific markets. It's not like they'll pick up a house in Baltimore, they'll pick up a house in DC, they'll pick up a house in Jackson Hole, Wyoming, they'll pick up a house in they're very targeted in low market, high demand areas where they know they can get a return on the investment. So I don't necessarily agree with institutional buyers. I just know that they have it based on a projected rate of return is how they go after markets.
Yeah, so I think the report was that the concentration of the institutional homes are in Atlanta and Jacksonville. Those would be the highest percentage of the institutional investors. And then the funny thing that always bothers me is people always get upset and start talking BlackRock when they hear that they're going to ban institutional investors, when it's actually Blackstone is the one that is buying the institutional homes up. And then the funny thing Trump said was he's like, institutions don't live in real estate or single family homes, right? But then there's also tenants in a lot of these properties, right? So if you were to ban these investors, let's say, and now what are these renters supposed to do, right? Because a lot of them probably don't qualify for a home. So if we take these
rents,
yeah. So I think for me, I think it's definitely just headlines. But I think the more important thing for housing and affordability is what his other announcement was, right? So Tyler, do you want to touch on that more and what his announcement was?
Yeah, he announced that he was going to direct his people to buy $200 billion in mortgage-backed securities, and with the thought that will drop interest rates and then spur housing. And I mean, obviously, this is like less than 24 hours later, but it's starting to work as far as pricing goes today. Like everything that's coming out is better. The 10-year treasury, which a lot of people, rates used to more closely follow that, but they don't. I mean, you have to look at the mortgage-backed securities. The 10-year treasury really hasn't moved. but mortgage-backed securities have moved a lot. So I think it is working, but I don't know. I mean, this could just be like the day after, it's a headline thing. All these traders are trading on that news, and then Monday we could find out, which I still don't think that he does. Does he really have authority to tell anybody to buy $200 billion? We don't know. I mean, what's going to happen? Will Pulte listen to him and make sure it happens? It'll be interesting. So as a mortgage broker and a lender, I would love it because rates get cheaper, and it's working so far today. I think your point is true, though, that's a much more effective headline than the previous one. If we really wanted to get rid of investors to help people buy their first homes, I'm sure all of us have rental properties. We own the largest amount of rental properties in the country. Mom and pop investors own a gigantic portion of them. You could say, hey, you can only own one house. Why wouldn't they do that? That's going to piss off a lot more people than saying, hey, we hate Wall Street. Wall Street's bad. They own a lot of houses. It's just optics. And I will say he's good at poking the bear.
Before we let Aaron stir things up on this topic, what is Emily's thoughts on this, on Trump's announcement on buying mortgage-backed security, or Fannie and Freddie buying mortgage-backed securities?
I think we've just seen a lot of things that I think Aaron said it that have been thrown at the wall. And I think they're just trying to find something that might help or make the public feel like they're trying to help. And so we talked about there was this big, I'm going to try to do a 50-year mortgage. And I literally the next day showed someone a house and they're like, we're going to wait till we can get a 50-year mortgage. And I told them, you realize this is just something that's being discussed. This isn't going to happen probably. And if it does happen, it's going to take way longer than the amount of time that you have. And so people don't understand. These are all conversations and they're just options being thrown at a wall. And to actually put them into action takes time. And so again, it's another conversation. It's another thing to throw at the wall and see if one, it can be made to happen, and two, if it works. So I think it just passes over, and next week we'll be having a whole different discussion about another option that got thrown at the wall, probably.
All right, Aaron, now is any of this politics related, or is this
is this your villain outfit? You like put your hat on and your glasses? Like, do you change your character?
I'm so tired. Like, I'm trying to read this thing, and in like my mind, I was like, I look terrible in glasses, but I'm like trying to read this, and I'm like,
well, Aaron, before you answer that, I will say Joe V is here and says he's glad Tyler and Aaron could wake up to have this live.
Oh man,
hey, I got my blanket right here, Joe, in case I need to fall asleep.
You missed the first part. I get more sleep at work than I do at home, buddy.
All right. What's your thoughts then on this?
All right, so like let's go to the historical facts first. So in 2009, 2010, the Federal Reserve bought 1.25 trillion in MBS to support the housing market after the 2008 crash. So I think Emily and Tyler already touched on the amount of foreclosures back then versus now. It's significantly different. It's over 100 million less foreclosures. In 2012, 2014, they started buying 40 billion in mortgage-backed securities. In 2020, during the COVID pandemic, they also spent 40 billion. So this isn't the 200 billion they're talking about doing now is not as much as the 1.25 trillion they did it after the 2008 crash. So like, let's put everything in perspective. Like the whole goal is to get the rates down, make it more affordable. The entire country falls back onto real estate investing, right? Or real estate purchases. Like this is where they get a good chunk of their property taxes from, state and federal, depending on where you live at. This is where they get a lot of the benefits when you buy a house. So we talked about ADUs before. Like now they're starting to do ADUs in this area. They do that because they want to increase the square footage of the property, livable square footage. If they do that, the assessment goes up. The assessment goes up. The taxes go up the following year. That's going on right now. Maryland is a 3-year process. We've broken into 3 different locations. So year 1, they'll have the assessment. Year 2, the taxes will go up. Year 3, they'll start looking for the next ones. So you got to understand, like a lot of this stuff is not just like a lot of people see things at face value, and DC is very much political theater. So you go to Hollywood and there's like in your face, this is, things blowing up and they're having movies and all the drama and blah, blah, blah. And that's Hollywood theater. Political theater in DC is very similar, but theirs is, let's say inflammatory things. Let's see what sticks. Let's get in the headlines. Be important. Let's be, face forward. So you see people like, I'm just going to throw AOC out there. She's an easy one. She's an easy target because she's a moron. But she says a lot of stuff that's not that's not backed by facts. It's just emotional responses and emotional comments. But she gets forefront and she gets people to follow her. I mean, she's a fucking bartender for Christ's sake. She doesn't have the emotional bandwidth to be an actual congressman, but she gets attention, and attention gets you votes. So that's what you see a lot in DC. And I say this kind of tongue in cheek, but I've met probably hundreds of congressmen and senators over the course of my life. I run into them randomly. I used to work in Capitol Hill. So it's just, you got to understand, like, the things they say is for their benefit sometimes, is not for our benefit. When you vote them into office, it's a lot of look at me, look at me, look at me, look what I can do. It's kind of like the moron up in New York City, Mamadani, whatever his name is. He's like, I'm going to give you everything for free. No, you're not, because state governor said, no, we can't do that. We can't afford that. We can't throw money at a problem to fix it because it's not going to go away or make it better. So that's my 2 cents on political theater and where it's going. And it's going to keep happening. Canada has a 40-year mortgage already. So you have to think about this in real terms. So I'm 45 years old. If I go buy a property right now for a 40-year mortgage, I'll likely be dead before that comes to an end. And then if I sell a property, obviously we're investors here. So in our area, my area, it's 8% when you buy, you lose, and 8% you lose when you sell. So like if I buy a $100,000 house, my closing costs, my transfer and title is going to be about 8%. So that $100,000 house is actually 108. When I sell that house for $200,000, I also lose 8%. We'll say just random numbers: 6% to the realtors, 2% transfer and title. So when I look at it from an investing standpoint, at a 40 or 50-year mortgage, most houses are not going to appreciate more than 2 or 3% a year. So if you go up 2 or 3% a year, how many years do you have to overcome to make a profit on that? Or are you going to stay there? And realistically, most Americans now, not the 50s, not the 40s, not the turn of the century, most Americans now do not stay in the home that they're living in after they're 60 years old, 70 years old. They're not dying in place or aging in place, however you want to say it. They're going on to assisted living or living with family. So these houses are not going to appreciate. They're not going to make money. They might be upside down because we don't know what's going to happen in the future with these rates and the economy. And whoever says dumb shit to the media.
So Emily, you being a broker, are you getting your buyers or sellers possibly ready for rates to come down or anything? Or are you prepping them for what the market might look like in 2026?
I think you can't time the market with anything. It's just like the stock market, and there's people that are experts that can, right? They play that game and they're watching it and they're educated and they're paying attention. But then you have the average person who's dollar cost averaging, they're buying index funds. They're not, if they're smart, they realize they don't know enough to be playing that game. And it's the same thing with housing. There's people that tell me I'm going to wait for it to go down, and they have these unrealistic expectations. Or even in some of our group calls we do with the school community, and people talk about, I want this return, so I'm going to wait until I can get it. You'll be waiting forever, and then you're losing your time on the market. Aaron talked about age, and I think about that as I get older, and I think, okay, if I bought the things I'm winning on are because I bought them when I was 24, not things that now I'm 35. If I buy something now, it's a different game because your biggest asset is your time. And so, yeah, you want a good deal, but if you wait 7 years and then buy, you don't know what it's going to do. And then you lost that time too. So for a normal home buyer, or maybe an average investor that's going to buy a couple things in an average market, their best asset is just time in the market.
What's the average growth? Was it 2 to 3% for high demand markets for appreciation for a home?
I don't know. I don't know that number.
Isn't it like the national average, like 2 or 3%?
Yeah, it's something like that.
Yeah. I think 3 is what I hear, but that's like, I hear it. I'm repeating it. I haven't checked it.
But I agree with you. I think, people are trying to time the market versus time in the market. I just think it's like a fool's game. I think it's so hard to do. And even all of us, we're in this, especially if you're a broker, like you're doing this day in and day out, and it's like our best guess, but we don't know if there's going to be a black swan event, what's going to happen. And people are always trying to outsmart it. And I always think of like people that I know that have been waiting since like 2018. Oh, I'm going to wait for rates to drop, or I'm going to wait for this massive crash to buy my house. And meanwhile, if you've owned a house since then, like my house has gone up over 100% since then. It's just like, yeah. What do you think California having the largest number of people.
Yeah, so if people don't know, Tyler is in California and he's probably leaving soon. I don't know. We always joke about that. But Tyler, what do you think of California having the largest number of people leaving in 2025?
So that was something that we talked about last night too. And I think it can have some effect, but we still have a big housing shortage here. And I'm not sure if anybody's familiar with California government, but we like our laws that are crazy. And so it's just going to slow down development. And that was so I'll bring this up too. That was something that blew my mind as well. Because what do? We have a housing shortage, so we need new construction. And our new construction numbers for 2025 were 57,000 units. In the peak of our building, 154,000. Right, so it's like we're way off. We're not going to if we have negative net migration, we're not going to have this glut of housing that's available. And what we were discussing last night is the pattern that we're also seeing is you have lower skilled labor leaving and people coming in like high paying tech jobs, things like that. So that also plays into, okay, like Aaron mentioned, a lot of stuff like when we were firemen, we all get paid because of property tax revenue. So if property tax revenue drops, then we're going to be in trouble. But with all these people coming back in, even though it's a negative net migration, housing prices should stabilize. Long term, who knows? I think it's a bummer because I think the state is awesome, but yeah, I don't think it's going to have a huge effect because it's been happening for years.
I love California. I just speak of politics. California is beautiful,
but yeah, it's expensive to live here.
Exactly. But I don't know. Does this impact you, Tyler? I saw that they said the California Public Employee Retirement System has a $166 billion shortfall.
So that's CalPERS. Yeah. So I'm part of SARA, which is a private pension for the county of Los Angeles, and we are better funded. But yes, when the crash happened of 2007 and 10, I don't know if anybody remembers, but CalPERS was in big trouble because they were one of the larger buyers of all the mortgage-backed securities that were underwritten with all the subprime loans, and they got smashed. So the whole thing that Aaron, myself, and Mike do on first responder financial freedom, and I know Marc, this is what you're doing too, is we're saying, hey, it's a great job. Pension's awesome. Don't let it be the only thing you rely on, because if something like that happens, maybe you blow out your knee and never go back to work.
Or hurt your shoulder.
Yeah, you need additional income. So, yeah, I do remember when CalPERS was really underfunded. The first year I got hired, we were still coming out of that, and my captain was telling me, hey, you might get a pink slip in your locker because we still don't have enough money. And I'm thinking, dude, I just busted my butt to get this job, went to the academy, busted my butt on probation, and nobody ever talked about this pink slip in my locker, but that's a reality. So,
well, you did mention first responder financial freedom, so I do see a lot of new people tuning into the stream today. So if you folks can jump over to Emily's YouTube channel, Tyler and Aaron's first responder financial freedom, go subscribe there. Also Aaron's Instagram page where he's doing a lot of cool work. What are you shaking your head for, man?
You always give a shout out, and I'm like, I don't have,
because he's going to start shipping soon, right?
Not until I retire, and I have boys a little bit older. Everything I do is local.
Harrison's asking though, Aaron, do you think that those layoffs will have a ripple effect in the surrounding areas? I have seen lots of forced sales in the Nova area.
I think there's a lot of unknowns in the area, and it's back to politics. So I'll give you one example of what's going on in the DC area. So FBI building is in DC. It's run down. It needs $1 trillion in work to get it up to current standards. So they bid out for 5 years. So the two places they ended up going for was Northern Virginia, which is where most of the FBI agents are residing in, or the Virginia area and DC area. The one who won the bid was PG County. It's actually a quarter mile away from my house. I can walk to it. Trump said they're not going to do that. They're going to keep them where they are. So obviously a bunch of people are scared that they have to commute from the other side of the Beltway to come over to Maryland. So the federal stuff is the same thing. Like they're demanding the federal workers to come into office. So you see a lot of federal workers leaving to go private. I don't think there's one answer. It's just DC has so many moving parts, and Harrison knows this because he lives on the other side of the Beltway from me, that there's so many moving parts. There's a lot of stuff for the federal government, the USDA and FDA farm out here by me. they're talking about selling that or annexing it into College Park by University of Maryland. So like that's going to be thousands and thousands of acres that is going to be taken over by a local government. But to Tyler's point, like a lot of people don't realize when they look at their retirement. I want to just take 2 steps back. A retirement is going to be either self-funded or state funded or city funded, wherever you work at. So if you're not privately funded and the government controls your retirement accounts, they can come in and take the money out and then file bankruptcy. Like that happened to Detroit Fire a couple of years ago, where the city filed for bankruptcy and the firefighters had to fight the state and the city to get their retirement back. DC is a self-funded retirement account. We don't depend on any of the money from the city. If they did, I'd be worried about them squandering it, because as we all see how good government is at controlling finances, I would be very worried about that. So if you are listening for one of the first times and hear this spiel, because I've talked about this before, make sure you know where your money's going, how much it's going, and what it's being used for. Same thing for, we'll talk about investing, the same thing for investing. Like if you're going to hire a contractor, you need to know where your money's going. Are you paying, like government prices of $5,000 for a hammer? Are you paying, $20,000 for screws? So like I look at government contracts fairly often just because I'm in the area and I have a lot of friends that are government contractors. If you want to become rich, learn government contracting. That's something I would like to do in my retirement. But like I just saw a ballpark down the road, just got a government contract, local government contract for $8 million. The job is 2 baseball fields, a soccer field, parking area, lighting, regrading, and a path to go around it. So I called one of my buddies who owns a bigger construction firm, and I was like, how much would this cost you to do? He was like, labor, materials, equipment. He's like, probably around $1 to $2 million. So they're making a $6 million profit, and they bid it high because they don't want to do it. So they bid it out for a year and a half contract, and all the equipment over there is leased or borrowed from Sunbelt Rentals. So I drive by, like they don't own any equipment. They probably don't have the manpower. They bid it out for a year and a half because this 3-month project is not going to take them a year and a half because they didn't want to do it. Like they just kind of bid crazy prices. So like look and see what your numbers are going into financially. You don't want to waste money on stupid shit. I know Emily, I looked at her page last time that she was on with Marc, that she does a lot of her own hammer swinging. I do too. So we know like there's the job that we want to do and we'll knock it out quick, and there's the job we're going to bid it. We don't want to do it. You're going to bid high in the jobs that you don't want to do. And then if they take it, it's kind of like, all right, well, this is worth my time. So I don't know. Where was I going with this? Oh, the Harrison, the market. Oh, the other thing was in this area. I know I go on tangents, Emily, so I'm sorry.
Oh, you're fine.
You're not used to it yet. The other thing for this stuff is that I think all of this stuff is political theater, or like it's commentary. So the media is very much controlled by politicians and higher ups. So if they're going to control the narrative, they can make everybody pay attention to this thing going on, not this thing going on. So like dangle the shiny thing, but don't pay attention to this over here. Like we're going to change the rules right here, but we're going to change the laws over here. So like anytime there's something big going on, like right now it's Venezuela, right? Or the shooting in Minnesota or Minneapolis, wherever it was. Like, all right, everybody's focused on that. Everybody's fighting about that. But what else is going on? What kind of decisions are they making over in Congress? What kind of decisions are they making in your local governments? If you're not involved and you get all your information from social media and local politicians, then there's something else going on and you should pay attention to it.
Yeah, everyone forgot about the Leering Center and the daycares already. It's not. It's old news. Oh, you didn't. I know you did. But Emily, so you're in Wyoming. You're a broker. You do your own contractor yourself also. But so Brady, who's also in Wyoming, says never sell your performing assets, right? And I think someone else, and Tyler mentioned it, time in the market, right? Beats timing the market. So have you ever sold any of your? I know you do flips, but are you just a long-term buy and hold investor?
Yeah, I prefer to buy and hold, but I think depending on when you need capital, sometimes people say, oh, you should just buy and keep everything, but you also have to be able to move your business along. So I have done, I'd like to alternate, buy and hold, flip to re-inject a little bit more capital. Eventually I'll probably just hold on to what I'm purchasing, but sometimes you just have to have that continued active income to put into it. And sometimes you can burn and get money out, but right now I'm kind of just renovating stuff with the intention of flipping. And then if the market slows down, then it will be a rental. And I always make sure that if I'm flipping something, I can also hold on to it as well if I need to. But yeah, perfect world, you hold it all, but that's not how money works. Unless you have like a rich mommy and daddy or something, or somebody who's just bankrolling you.
Flipping is very cash intensive, yeah.
So Joe V says, even though you may be making good money, those jobs you bid high because you didn't want to do them still suck.
Yeah, sometimes you just say no.
Gus is in Maine. He'll be on Monday live streaming with me and Cody. But Gus says, Aaron posted before about daycare in local communities in Minnesota. How do you view the rural immigrant communities like the Somali community playing in the state today? Oh, damn, we're going to get canceled for this.
That was just such a like.
Gus is like,
got him. Fish on. Got fish on.
These are his opinion. This is Aaron's opinion. I want to make that clear.
I posted this before. Like, if I would take a hardworking illegal over a lazy leeching American, 10 times out of 10. I've worked with illegals. I work in an area that's very Hispanic dominated. A lot of them are illegal. I don't ask. I don't want to know. I don't care. If they're willing to work, I'm willing to work with them. I also know what I'm doing. Just like Emily, like she's a contractor, so she knows what she's looking for. So if I'm hiring somebody for day labor and I'd be like, do this, this, and this, and they're not doing it right, I can be like, hey, let's make an adjustment. Let's try this instead, and she can know it. But like, I really don't. Hold on, biting my tongue. I really don't care the background of somebody. If you want to make the country better and your position better, I'm with it. But if you come to the United States to leech off the system, I think you're a piece of shit and need to be kicked out and lose your privileges. That's just how it is. But I feel the same way I don't care if it's a white Christian American. I feel the same way. If you're a leech, you're a piece of shit, then you should get the fuck out. I also don't believe in like forever benefits either. Like you shouldn't do say SNAP or Section 8. Like that shouldn't be a multi-generational program. It should have parameters. And that's also going back and looking like, let's look at the numbers. You always follow the money because the money's going to give you the answers. Like who's getting the kickback, who's getting the money. So I posted this on the DCFD. I remember a group called DCFD Investing and Learning. It's just for DC firefighters. I posted this on my page and their page. And it said that there's the funding. I'm not going to get specific with the numbers. I can't remember them. But there's 5,138, I think, homeless people in DC that they counted. The government has subsidies of $870 million a year for those 5,000 homeless people. It averages out to each homeless person gets $171,000 a year in benefits. DC Fire Department, in comparison, we get $380 million is our budget for next year. So the homeless, 5,000 people homeless, they get double, almost triple what our budget is for the fire department. So why are we giving $171,000 per homeless person per year? Where's the money going to? How's it broken down? Is it going to nonprofits? Or the nonprofits actually taking the profit? Like these are the what's that kid's name with the camera who was walking around like videotaping all the Nick Shirley. Like, I would love for him to come to DC and be like, excuse me, why do you guys get $171,000 per year? Blah, 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 blah. And like, I know the homeless shelters in DC, they're fucking nasty. I just don't see where the funding is going to. So stuff like that it's you always pay attention to where the money is going to, because that's the most important. If the money is getting squandered, we're not going to know it until you follow the paper trail. The other thing I want to touch is Tyler said earlier, actually Emily said earlier, don't time the market. Tyler said the same thing. Average house cost in DC is about $650,000. If you wait to buy that and appreciates at the 2 or 3% that we talked about earlier, 2% of $650,000 is $13,000. 3% is $19,000. So if I wait 2 years and it appreciates in that time period where I'm trying to wait for a pullback or a market drop or adjustment, it could potentially go up, $20,000 to $40,000, $60,000 if I wait 2 or 3 years. So that's why the timing of the market is important, or not important, because if you can get in there and this place appreciates, say there's a pullback of, the biggest pullback ever was during the 2008 market crash, and that was 27%. Outside of that, it's been closer to, I want to say 9.7% if my memory serves me correctly. So either way, like if you wait 3 years and it goes up the max of 9% and it pulls back 9%, you're still ahead of the game because, I mean, all the closing costs and everything associated with it, you're going to take an L. So don't time the market. Find deals that are good and off market if you can. I was talking to a couple of guys about this. Like Tyler, I think you mentioned the build to rent, or was that Emily? Who talked? Tyler's got his market thing off. Your landscaper must be there today.
They are, and I don't want you judging me. That's exactly why I turned it off.
He mentioned that before he jumped on.
Son of a.
Oh,
I'm crippled, Eric. Leave me alone. Now I forgot what you were going to say.
I did too.
You were talking about build to rent.
Oh yeah, build to
Oh
rent.
yeah, institutional build to rent. Yeah, that's what they're doing. They've moved on from buying existing inventory and they're going to go to build to rent. So I mean, to your point, follow the money. If that's what the richest people in the country are doing, maybe we should pay attention and follow suit, right? Like, don't follow everything they say, but watch where their money goes, and it's probably a pretty good idea to do something similar.
Derek Sherrill, I don't know if you should have him on here, Mark. Derek's a great guy. He lives out in Oregon. He does ADU builds. He's called that ADU guy on social media. He does a lot of infill. He does a lot of ADU stuff just because he wants to create affordable housing. So like stuff like that. But like, is he going to get affected with this, institutional lending? Is build to rent? Is that one of the parameters? Like, because I can do a build to rent house and put it in an LLC and not put it in an institution. I can do build to rent and put it in my personal name. There's different ways around it. So whoever said in the first part of this, set the parameters first. Let's see what they're going to do. Because right now this is all conjecture. It's all conversation. It's not actually pulling the trigger. It's not actually going to come to fruition. So let's see what they actually do first, and then we can have a discussion if that's going to impact people.
And ultimately, here's my perspective. I stay out. You guys seem very informed politically. I feel like if you're not informed, you shouldn't be speaking on it. And so one thing in my mind is I really stay out of politics a lot because I feel like I can't make a difference there, but I can make a difference in my small community, like with my neighbor and the people I know and the people I interact with. And so that's not something I participate in so I'm a little ignorant there, but I do feel like most of the time that anyone in a certain position of power, there's no way you can get there without owing a ton of favors. And so even if someone has the best of intentions, if they're really high up, honestly, I just don't trust it. I don't trust the whole system. How can you get there without you owe this person tit for tat, all that type of stuff. So if the institutional investors are making enough money that this is going to have a big impact on them, and they have enough sway over any of these pieces in the political system that make this happen, it's not going to happen. If it's going to hurt them big enough, they're going to make sure it doesn't happen to all the people they need to call in favors for. So in my mind, with a very ignorant understanding of politics, if they have enough sway and they're going to get a big enough hit off of it, it's not going to change. It's not going to be impacted.
There's a quote. I'm going to get you canceled for this one. There's a quote after Bill Clinton was in office that says, DC is all about who you know or who you blow. Just ask Monica.
All right. Let's see. Gus was saying no bait. I may agree with his answer. He wanted to ask. Let's see. Oh, Ranger has a question here. It says, multi-pronged question. Explain the difference between money and currency. Historical examples of each in different nations and time periods, and why does it matter today?
It's like a pop quiz.
Yeah.
I got that one.
You want to tackle this one?
So I'm not going to go between money and currency because it's all relative. You ever heard of Forex? It's foreign exchange. So you can bet on, buying the American dollar versus the Venezuelan, whatever they use, or the Tanzanian shilling versus, the Canadian, whatever, or the pounds versus, whatever our country uses. So every day, one value of the dollar will go up or down, and the shillings will go up or down. And it's not like just a straight counterbalance left to right. Like it's a multi-tiered system. So like the US dollar might have more buying power here. And Americans don't pay attention to this because the American dollar has historically, since World War II, I want to say, I could be wrong, has been the dominant financing currency in the world. So we haven't had to worry about it as much. You go to places like China, when I was trying to do more import stuff, they very much focus on what's the Chinese yen versus the American dollar. So like if I'm importing something, they want the money up front when their yen is strong versus the American dollar, because they're going to have a greater return when their currency is stronger versus if it's weaker and something happens, then the money doesn't have as much impact. Just like inflation. Like if we have inflation like Venezuela, all the politics aside and all the stuff aside for what's going on down there, it used to be a very, very strong economy until inflation, socialism, corruption all took place. That was one of the most powerful and financially stable places in the world back in I think it was like the 70s and 80s. And then after Chavez and Maduro took position, then all the corruption happened and all the inflation happened. I think inflation was something like 50 million%. The money that their currency was printed on was worthless because they had no buying power, which is why they had a lot of people leaving. So for the very extended answer, I think that a lot of people don't realize that in America, our dollar is very strong because it's nationally, internationally worldly used. That's why the BRICS thing is a big issue, is because if we get away from the American dollar, it will lose value and it will impact the United States if they start using different currencies. So that's the best answer I can give you off the top of my head.
I think money, what they say, money is a store of value. Currency can lose value. I think what he's asking or maybe getting at is we're currently still the reserve currency for the world. And if we lose that status, that's going to be a huge deal. That'll probably be one of the biggest deals, I think, next to AI. But yeah, if we lose the reserve status. So yeah, money's tangible, right? I'm sorry, currency is tangible, money is not. So I think what they're asking is about the reserve status would be my guess, because that's hugely important to us. That's why we have so much power and wield so much power. And all fiat currencies die, and we're on our last breath, supposedly, with that. So I think if we lose our reserve status, it could have a huge impact.
They're making fun of Derek.
Let me. I just want to put this out there. I've started looking at precious metals lately. Not lately, but for years. Just because they always say buy precious metals because it keeps up with inflation. It tracks it, I guess, the best way to put it. Like it doesn't gain value, it doesn't lose value, it just maintains the buying power. So I've been looking at why silver prices have been going up. And, I love good conspiracy theory. If anybody knows me, I love a good conspiracy theory. If I could replace this with a tinfoil hat, I absolutely would. But if you look at the amount of silver, how much has gone up lately, I think it's gone up. When I was talking to one of the guys back in the summer, it's doubled plus since this summer. Why? Because it's been stagnant for fucking 20 years. I think it's because the data centers, the high demand for using it in mechanics, the high demand of using it for missiles. So say Japan just came out and said that they're going to do, they're switching from their defensive to an offensive military. So they haven't had an offensive military since, we bombed them, our grandparents bombed them. So now they're switching from defensive to offensive, which means they're throwing, I think, like $57 trillion, something crazy, to increase the military presence. So if you increase your military presence, that means you have a lot more electronics, you have a lot more bombs, you have a lot more missiles. Each missile, I want to say, is like something crazy, like 500 ounces of silver. So same thing for us. Every warhead that we have one of the biggest stockpiles in the world, if not the biggest. It's because there's a lot of silver inside of it. Data centers, same thing. If Elon Musk is going to fly up into space and encrypt data centers in space, then this is going to have a high demand in silver production to have those things operating up there, or the data centers in general. Like my brother works for a construction company. He does. He's a superintendent for a company called E.E. Reed. They do the data build out centers for Amazon. If they chase the optics, the fiber optics up and down the East Coast, and they build data centers where the fiber optics are going. So again, any of these data centers that are being built has a high demand for equipment that needs precious metals, whether it be gold or silver or whatever it might be. So if you guys are looking for things that kind of hedge against inflation, these are one of the things I think you should look into. I'm not saying you should buy it, I'm not giving financial advice. It's just one of the things I've been looking into.
Yeah, I would just say, like the currency is kind of like the wrapper, I guess, and the money is what the value is being traded. So like you touched on, right, like gold, silver, that'll be the currency itself, but the money is what it's valued at or what it's going to be traded. Shoots where? Oh yeah, like I said, they're making fun of Derek.
His
And
short.
he's wearing
I
his
did think of his
cut off
short when Aaron
jeans.
said that, but
Hey man,
he's a good
I'm
dude.
myself in a jorts connoisseur. Don't hate on his jorts.
And
Do you have the
Jovi's
hammer loop on your jorts though? That's the real question. Do you have that hammer loop on your jorts?
No way.
Have you seen those? They have the little loop where you can drop your hammer in back in the 80s, dude.
That's very judgy.
Yeah, Jovi says mine aren't cut off, but he does. He said, "What's wrong with jean shorts?"
I want to see Emily's next YouTube video in jorts. Like she's working on a project.
Well,
I
we
gotta
just
find like a really manly pair because I try not to be like there's some girls with construction pages that it's not about construction, so I really try to be covered up. So I'd have to find like my dad's jorts or something.
That's what makes me think that my dad was a contractor growing up, and dude, he rocked the jorts all the time.
There's this ultra runner. His page is like Andy Glaze is his name. He's out of California. Oh, isn't he a firefighter?
Yeah, we had him on our podcast.
Oh, okay. And he always wears like they're running shorts, but they look like jeans, and that's like his whole thing. So,
yep. Yeah, he's got little shorty shorts.
Yep.
Yeah, I like Andy. Andy's he's cool to follow. He was top like 10 runners on whatever app it is for
Strava. Yeah.
Because you do marathons, right, Emily? Or no? Are you?
Yeah. So, well, I did an ultra a couple of years ago, but I don't know how you balance keeping weight on. It's just crazy. That was the hardest thing. My face was like so skinny, and so that was the hardest thing is balancing the nutrition with it because you have to train so much to not just suck so much that day.
You do trail ultras or do you do road ultras?
It was a trail ultra. It was in Park City, Utah.
Oh, cool.
So it was like,
yeah, that's rough. I got hurt in a house fire years ago, and I was training for my first trail marathon. And I love running trails. I can't run blacktop or concrete anymore. My ankle won't take it. But I love being on the trails.
yeah, that was cool because it was by the resort. So, it's like where I live, your hills are up or your hills are down. So I got there and it was kind of like this. And I was like, oh, this is way nicer than what I've been training on. So it was fun. But I haven't done anything that long since that one. So I think I might do just a normal marathon this summer.
Years ago when I was skinny and in shape, I did Kilimanjaro for my 30th birthday. And I was like, can't tell me shit. I'm doing Kilimanjaro, like hiking slow, get to the top. Man, when I tell you these dudes were running past me up and down the mountain, I was like, I'm not shit. Like my whole ego was just kind of like.
Have you seen those races where they're like uphill races?
Yes.
So they're not long, but they're just hills, and it's just crazy. It's wild to watch some of the. Yeah, that's not for me. I just like to do it for fun and turn off my brain, but I'm not winning anything.
What was your saying again, Aaron? I think Ranger 1991 wants to borrow that.
You can't fuck 5.2s and call them a 10.
No, I think the one about Monica.
Is that your life motto?
No, when I first moved to College Park, my captain also lived here, and that's what he told me. He's like, "I'm gonna give you a good piece of advice, son." He's like, "If you're gonna go to the bars, you can't fuck 5.2s and call them a 10. Quality over quantity." And I've taken that into real estate too. That's what I'm gonna bring this around to real estate. It's all about who you know or who you blow. Just ask Monica.
All right.
Hey man, I want to make your show lively.
High level stuff, ladies and gentlemen. We're getting high level today.
That's what I said. I said you are one of the most requested guests to always get back on. Well,
that way Marc can work on his review process.
Yeah,
YouTube.
I can see how far I can push the limits before we get banned.
That's why I linked to our first responder pages and not my personal page.
Well, I did put your Instagram. So talk real quickly. Like you said, I always give you a shout out and all this, but I love the stuff you're doing on there. And I don't know if Emily had a chance to take a look at it, but what do you work on your Instagram page? What are you doing there? So
it used to be like try to be professional, try to be like show what I'm working on. And now I'm like, fuck it. It's like my kids, like that dumb shit that we run at work. Like I don't know. Like so I do a lot of like I used to build furniture. It takes too much time and space, a lot of weight. And I switched to refinishing furniture when I was first moved to College Park. You realize if you want to find a easy hustle, not easy, but like a simple, like mindless hustle, go live near a college town because as soon as college lets out, they just throw away all their furniture and it could be good, it could be bad. If you need to furnish a place, like it's an easy way to get it. I know because I live like a mile away from University of Maryland, and I can tell you every single year these college kids, like, they don't care about money because they're buying like brand new furniture and just throwing it in the dumpster when it's done or putting it in the curb when it's done. So I used to get like the good stuff, not the IKEA stuff that's made of MDF, and I would either refinish it and sell it, or I'd hold on to it and then sell it back to other college kids 3 months later when they come back to college. That was probably 20 years ago. Now I do mostly like laser work for retirements, for promotions, military, fire, police. And obviously 9 out of 10 times I forget to post the stuff that I make because I can't post it until they're given to them as a gift. And by that time I've got like 40 pictures of my kids and like 2 pictures of like work stuff. And it's kind of like, I forget to post it. So yes, I don't ship. Maybe eventually I will. I've actually been looking at what to do when I grow up. I think Tyler and I've had this conversation before. It's like he was thrown into like, here's the next part of your life. Whereas I have like 2 years left, 2.5 years left before I got to figure out what I want to do. So I'm looking at buying new lasers. I want to do some gun engraving. Problem is that I know all the gunners here. I have 2 good friends that own gun shops here. So they said if I do laser engraving for guns, then they kept me a lot of business. But more than likely, I'm going to leave the DC area when I retire because fuck this place.
Where do you want to go?
I don't know. That's my issue. I talk to my wife every day. I'm like, do we want to go to Florida? Do we want to go to Alabama? Do we want to go to Delaware? Like, where's my money go the farthest? Do you want to go to South Dakota? Do you want to go to Wyoming?
Do you have any castles in Wyoming? That's what he's looking for.
So that's the other thing is like we're looking at potentially moving back to Scotland or go to live in Ireland where we got engaged when I retire for a year or 2 with the boys so they can experience it growing up.
Cool.
I don't know. Like I really don't know what I want to do when I grow up. Like what do I do with my hands? But I love it. All right. Let's change this. This is one thing I want to ask Emily. Actually, I want to ask all 3 of you. So I have been in the mindset of why not just sell everything and put the money and the equity and I have into the stock market. So I know I'm going to get a guaranteed rate of not a guaranteed rate of return, but the average rate of return right now is 10% for the S&P. So if I we'll use round numbers, take $1 million and put it in the S&P, get a 10% return. My net worth goes up $100,000 a year, right? I don't have to do anything. I don't have to swing a hammer. I don't have to have tenants. I don't have to deal with toilets and lights and all the dumb shit that we have to deal with. So like, why are you staying in the real estate space when you might be able to make easier, better money somewhere else or use a combination of it? Because that's what I'm struggling with now. Anybody?
Who's going first?
Marc, you start. Marc's always like sitting back and asking the questions.
Well, I'm reading all the questions coming in now. There's some from Aaron.
I think about it.
No, well, I think it just depends where you're at, right? And we talk about it quite a bit in like the one rental at a time community. Is real estate will probably get you to financial freedom the quickest because of leverage and things like that. It is more work and there's a lot of struggles, but as far as timeline, it'll probably get you there quicker. But I definitely see stocks or other asset classes as an option towards the end. Like you're saying, it's less work and you're getting a certain rate of return without really doing anything, right? So definitely I think it's more of an end game play, but you have to get to that point of your net worth being a certain amount. And sometimes maybe people diversify too quickly, so maybe they don't hit a certain net worth amount. But I definitely see it as more of an end game play. And even for some people, I see it more of an easier way to transfer wealth over because you're transferring kind of something where it's hands off for maybe your kids, and they don't want to get into real estate, right? They don't want to be a landlord, right? So sometimes it's an easier way to transfer this wealth over and save a lot of headaches. So yeah, I definitely, it's something on my mind as far as making things simpler to pass down wealth also. But as far as leverage wise, I think the real estate is what's going to accelerate things, to get to a certain point.
Emily, what about you?
I am a bit of a psychopath and I like to work and stay busy. I will never not be renovating houses. If I won $100 million in the lottery tomorrow, you know what I would do? Go to work tomorrow and keep renovating houses. Now, I might have more fun with it and not do them to make a return and do cooler finishes and not worry about stuff like that. But my husband is always like, what's wrong with you? Like at this point, like you don't have to be doing this like you're doing this. And for me, if you like fishing and you go fishing on the weekend, I like remodeling houses. Now there's pieces I don't like to do, and there's more things I would sub out, but I really like what I'm doing. I also think that there's a psychopathic part in the back of my brain that can't sit still. I mean, my husband says, you're like a hummingbird. If you sit down, you'll die. Like literally, if I sit down, I fall asleep. And I don't know if it's that I'm bored or what, but I do not like chilling. And so if I sold everything and put it in the stock market and can do whatever, I'm not a depressed person, but I think I would probably be depressed. Like that is not how I operate. And I know that. And so for me, maybe I will do more of that as I get older, and also still what I'm do when I'm doing slower. But that wouldn't bring me joy, and I don't think I would be happy. And also, kind of like you said, tinfoil hat, I have a lot of distrust of things I don't have control over. And so I know a lot of people invest in the stock market and they trust it, and there's conservative things that you can do that are not as scary. But if I F up and I fail in real estate, it's my fault. I know my market. I don't have a market that's just going to crash and I'm going to lose everything. I have control and I can steer the ship. To put everything in stock really freaks me out. That really makes me feel vulnerable.
Good answer, both of you. Tyler, because you just got thrown into this last couple of years.
Yeah, I mean, I think I should actually diversify more, but I just think that real estate offers things that I still want to capture, and it's a great hedge against inflation, which is probably the biggest reason at this point, and that's like what we're experiencing. I think it can give you it can reproduce income consistently on a monthly basis. And from the lending side, it's something that I always think about. Like yesterday, I just helped a borrower. He took out $43,000 on a cash out refi. That's tax free, man. I mean, he wanted money. He has the properties to do it. He picked one and said, okay, I want to cash out. How much shall I get? 43 grand he took out. There's no taxes on it, and the tenant is paying his debt down, and he can do that ad infinitum. I mean, just over and over. So there's a lot of things, but I think I know I need to diversify more. I mean, for me, it's like I'm so all real estate. I think I have to go on the other side as well. I know what you're saying, Aaron. I think the bigger thing is I want to park money, get 10% return, and not have to worry about anything. And I'm just not sure that we can actually do that. I mean, I would love it because I would do it because you get tired after a while. I mean, even if you love it, like I know Emily said she loves doing the rehabs, but that I think the training part is sometimes the tenant issues and things like that. But again, I have to remind myself a lot of us wouldn't have a lot of what we currently have, or the freedom to do what we want to do without those annoying phone calls.
Yeah.
But so I agree with you on I'm kind of in a phase where I'm sort of burnt out with the random things that have come up with tenants. So the last two properties I've bought, I have one I'm finishing up and one I'm starting. I'm going to flip them. I'm going to get rid of them unless the market shifts on me, because I'm at the point we have 10 that are rented right now. And then I have an ADU that my mom lives in, and I have an office space that we rent to our business. But I kind of got to a point last year where I was like, I'm kind of sick of this shit for a second. And so I'm going to flip for a little while, recalibrate, and then I'll probably, or something comes up good, I'll buy it. But I kind of needed to give myself a bit of a break because of not like the fixes, but just the dumb, disrespectful things that I'm so respectful. And I try to take good care of my tenants, and then breaking leases or screwing stuff, like things that are just like that. That's shitty as a human to do. Those are the things that get to me. I don't care if I have to fix your toilet. And so I kind of am shifting a little bit, going to flip for a while because I'm burnt out on that. And then I'll kind of recalibrate when I'm ready.
Yeah, absolutely.
So to, I think, Aaron's point about 10% return. So Brady, who's in Wyoming, who's going to be coming out with a book, I think, shortly, but he has a good YouTube channel. I'll put it in the chat also. But he says, how do you produce a 10% income from stocks? You would have to sell them, and that means losing assets. You can go with income producing stocks, but that would be 4 to 5% return.
Yeah, so I should expand upon that. I missed out one key piece. So we'll say the S&P makes 10% return. That means the asset itself is growing. If you take the money out, now it's earned income. Just like if I take money out of my 457 or somebody takes out money out of their 401k or whatever it might be, you get hit with either capital gains or earned income, depending on how you're structured. And then if you pay dividends, if you buy stocks that have dividends, you're looking at, average 4 to 5%. Anything above 6%, usually a higher risk, higher reward. But you can also take loans out against those. So like if I were to take a loan out against the stocks that I own, we'll say we'll just use round numbers, say $10,000, right? Then I have to pay back at 5 or 6%. But I'm lending that money. I'm giving it to, say, Tyler, and he's doing hard money. He's giving me a 10% return. I'm making the spread on that. So say you have a SDR, like a self-directed IRA, and I take money out of that and I give to Tyler at, I'm lending or I'm borrowing at, we'll say prime +1. So we'll say 7% right now, whatever it is. I give it to him. He's making a 10% return, or giving me 10% to use my money to lend to somebody else at, 11, 12, 13% plus points. So I'm making that spread of the 7%. I'm getting it out, giving to him for 10%. I'm making a spread of 3%. So you can do the same thing with stocks. So it just depends on what you're going to do with the money afterwards. And I want to say I agree with everybody's answer with that. I'm actually looking at buying commercial space and farms next, just because I want to have more money in one area than having money spread out. Because I invest 3 hours east, 3 hours west, up and south, up and north. I've done West Virginia, DC, Maryland, Delaware, Virginia. So now I'm starting to focus, now that I'm getting towards my retirement, knowing that I'm going to leave. So like my goal right now is, I just set up a search with Allie Anderson last night. She's a former state trooper, medic, flight medic. I want to look at wedding venues. I want to look at farms because more than likely when I retire, I'm going to take my parents and her parents with me. I have to build them a house, age in place, because that's how my life is structured. I'm probably going to take them with me. So it makes more sense for me to put it all in one place and have a compound or a family compound. I've got 2 young boys. I'll be 62 when my youngest turns 18. I'll be the fucking grandpa. But I'm okay with that because I'm trying to set them up for life. I'm trying to have generational wealth. So in addition to buying a farmette, I'd like to buy a wedding space. I've been looking at conservatories. I just think a big glass house I can use for multiple ways, more than one. It's not just somebody living in there. I can do event space. I have one friend who owns a wedding venue, and I think they net between $1.2 and $1.6 million a year. When I ran the numbers, their overhead is minimal. They have a barn dominium with beautiful landscaping, beautiful lot, only 10 acres. So I think there's opportunity once you get to a certain point in real estate that you can stop focusing on, $10, $20, $30,000 profit margins, which I won't touch because it's too tight here. I think that if you get into another realm of real estate, it can be less risk, more reward. So it's a very long answer to your 10%. So I think that this is stuff I didn't know growing up. And I have a feeling that all of us came from a blue collar family. Pretty much everybody I've talked to about this stuff comes from a blue collar family. We weren't taught this stuff. We didn't know this stuff. Our parents didn't know this stuff. They couldn't relay this information to us. So I think all of us, our kind of goal is to educate, teach people there's other options out there that we didn't know about. And if you listen to my stirring of the pot and my spiels, then you can actually take something from it. And if it's knowledge is power, but knowledge isn't power, but knowledge and use is power. So like once you learn how to do it, you can expand upon it. There's still stuff I don't know about. I'd still like to learn about. I don't know everything. I'll act like I do, because if politicians can do it, why can't I? At the end of the day, you have to figure out what works for you and what moves for you. I don't know what I'm going to do with my hands when I grow up. So like when I retire in 2.5 years, I've been in DC my whole life. So we'll see.
Anybody else?
Oh, go ahead.
No, go ahead. Go ahead.
I was just going to say, I think just that whole conversation was kind of just money being, Brady said money is energy in the chat. And you talking about, okay, I'm going to buy it here, I'm going to borrow against it. When you don't have the baseline, like when I bought my first property and me and my husband first got married and we had student loans and we were trying to get started, you can't get a house without money in your bank account. You have to have actual tangible, I have this much cash in my account. You have to have a certain amount of reserves. Once you have assets, you can borrow against those assets, and then money becomes energy. So I've realized as I got to a certain point where I had equity in properties where, so it's almost like I joke about it, but the money doesn't even exist. Like the Price is Right when they'd say where the points are made up and the scores don't matter. Once you have that energy to move around and borrow against, it literally is, okay, I have equity in this property. It could be paid off or it could not. I talked about this with you, Marc, in a previous podcast. So I'm borrowing against my equity and my properties, just like Aaron's talking about, okay, I'm borrowing against my stock. You can do it either way. And then I'm getting a line of credit to invest in another property and I'm paying interest. And when it's done, I'll pay that back and I'll recycle it and I'll keep using it. All I'm doing at that time is paying interest on that money that is the equity that my renters paid down in this other property, but it's all just, I'm never touching it. It's never, I mean, it's just passing around and it's just energy once you have the baseline. But until you get to the baseline, it really matters a lot more because you have to create this kind of pile of money before then you can create the energy that comes off of the money. And I think another thing, like Aaron was saying, another option would be if you can create something that you have equity in, maybe you buy land and then you have value because you build a venue, put a barn dominium on it, something like that. You could borrow against it because, for instance, my line of credit with my bank is 7.25%. If I even thought about that, hey, maybe next time instead of flipping, I'll pull this line of credit, I'll lend it to a flipper at 11%, and then I'm doing nothing. That's not a huge premium, but I'm doing nothing. So I've thought about once I can get more in the assets I have to borrow against, I'm just going to loan it out a little bit higher and make sure I have the reserve that if I had to, I could, if I have to take back their property or whatever, then I can go in and finish and renovate that property. But you could do that with real estate too, just like you could with stock. And it just depends what you feel more comfortable with.
Emily, I got a question for you. And Tyler and Mark, I think we talked about this before, but Emily specifically, when do you think you learned how money works? Like, obviously you have a really good grasp on finances and money, because I didn't start learning about this stuff until probably my 30s. So I didn't really know how interest rates and moving money around and making profits. And like, I didn't understand that closer to like probably my late 20s, early 30s. So when do you think you started learning about it? And what forced it?
So I've always cared an incredible amount about money. I don't know why. I've just always been really interested in it. And even when I was a kid, my parents worked really, really hard and made a lot of sacrifices, but I always knew that I didn't want to worry about money. Like, I think I kind of knew they worried about it and I just didn't want to. So even when I was young, when I was 14, there were kids that their parents would let them get jobs at McDonald's because there weren't a lot of places you could work when you were 14, 15 until you're 16 years old. And my parents were like, we're not driving you to work. Like, your job is not going to be a burden to us. And so I started a pet sitting business, and I would go around and put flyers in my neighborhood on telephone poles and hand them out door to door. I wanted money so bad, and I've never wanted to buy stuff. I just wanted financial stability. And even today, I don't want fancy stuff. I just want the money sitting there so I know it's there for the peace of mind. And so I'm afraid of dogs. I started a pet walking business, and I would watch their pets when they were out of town, and I would go clean up dog poop, feed their pets, feed their fish, feed their cat, walk their dog, whatever. One time I'm in this backyard and these dogs start circling me. I think they could sense my fear, but I needed that dollar. And I had to like call my dad. I had my little Nokia brick phone. It was my first cell phone. And I'm in the backyard and these dogs are like growling and walking around me. And I was like, oh my God. And my dad came and just talked to them like friends, and then it was fine. But I think they sensed my fear. And you know what? I kept freaking doing it because I couldn't get a real job until I was 16. And so I've always cared. It's always been really important to me. I've always had like 3 jobs, even through college and stuff like that, and saved. But I don't think maybe I started to understand until I had a couple of rentals and I had equity in them and went, oh, I can borrow against what I have. And I think maybe once I actually had enough that I had a baseline, I could do that was maybe in my 30s, but I just wasn't there yet. I mean, I was doing the steps I needed to take, but I didn't really get the results until I was in my 30s.
Okay. Mark and Tyler, what about you guys?
Tyler, go ahead, man.
Probably I would say 2000. So I was 27 when the market crashed. I learned about money real quick. I had always done sales since I graduated college. I was making good money, and I thought the train would never end. And then I realized that it did end. And I owned 3 houses and moved back with my parents for a little bit. And that was a nice whole big piece of humble pie. So I just didn't want to have to do that again.
Yeah, I think it comes in phases. I think probably when you get your first paycheck, you learn a little bit. You're like, what's these taxes, all that? What, I work this many hours and I don't get my full paycheck. And then, as time goes on, then maybe when you're getting your first credit card or whatnot, then you're like, shit, I didn't pay my balance and now I'm paying all this interest, right? So it kind of goes in phases. And then when you purchase a home, then there's a next step. You're like, oh, my credit score matters. I'm putting all this money for my mortgage, but only the principal is going down this much. So it kind of comes in phases. I think you're learning a little bit about money. But then at some point for different people, some things just changes. And I think like you guys, your podcast, what we talk about is some people just head down that path of just working the W-2 or working for the pension, and that's all they see, and that's the vision. For me, it was when everything shut down, the world shut down, and it really made me look at things or money, currency differently, right? And made me realize like just having this one stream is very risky. And then you start going down this path of investing differently, right? Not just putting it in your 401k or not just putting it in your deferred comp, right? Actually investing. And like you're saying, I think you always touch about it, Aaron, is like knowing where your money is actually going. Not necessarily just going into your deferred comp, but like where is the money actually going, or what is it being invested in, right? So I think it comes in phases, but I think usually it's just there's a point in time that flips the switch for a lot of people. And unfortunately, I think a lot of people just that switch doesn't turn on for them. They're just headed down this one path, right?
So I'm putting together. I'm sorry. Go ahead.
No, go for it.
So I'm putting together a presentation for DC Fire Department for the recruits and the cadets, where it's going over all this stuff. The APR, buying a car, buying a house, getting funding, how stagnant money loses money because of inflation. And I think the people moving, like I think you graduate from, okay, I understand money to I know how to use money to make money. And I think there's to switch is the best way to put it. Like Marc just said, I think people don't realize, like, one, they never even learn how the money that they have works, and they never have learned how to make that money make money for them. After Emily talks, I'm going to ask you guys about Dave Ramsey, because a lot of people have opinions about Dave Ramsey getting you to zero, but after that, his information is not as good. I want to get y'all's opinion on that. So I'm sorry for cutting you off, Em.
No, Dave Ramsey's the first step. All I was going to say is that's why it's important to talk about it, because people don't, like you said, Aaron, a lot of people aren't learning this from their parents. Some people don't have the parents that know to be able to teach them. We don't teach it in school. People are ashamed to talk about money, especially if they're in a tough spot, which is when they mostly need to be talking about money. And so that's why I think it's so important that people are willing to talk about it and share online, because I will meet with people that are pretty grown ass adults, and some of the things they say, I'm like, oh my gosh, how is that not? And it's sad because it's what you don't know what you don't know. And so it's just so important to talk about it so that other people can learn. And I think with Dave Ramsey, I think he is an excellent first step. And the reason I hate the no debt thing, I think he's a great plan for people that are in trouble. And I think he's a good first step. But for him to say you should never take on any debt, yeah, that's great. If you're a high earner like him who makes, I would say, tens of millions, if not more a year, you can buy rentals without debt. But debt is a tool if you're careful and tactical. Hasn't he had a bunch of bankruptcies and stuff? And that's why he started his program. And so he's scared of what he went through, and he's, that's his whole shtick, right? But I feel like for the average person, I would not be half of where I'm at if I didn't take on debt. It's just you have to use it and be educated about what you're entering into.
Good answer. Tyler,
Dave Ramsey's like core classes in undergrad, and all this stuff we're talking about is like upper level MBA stuff. And I think it's a good tool to get people out of debt. But the things that I hear and the amount of energy devoted to some of his stuff, that like I had a captain who was all in. I was like, dude, if you took that much energy and learned how to do like another skill, a marketable skill, or invest, like you cannot tell me that clipping coupons and all those money envelopes once you get out of debt is a better use of your time than learning how to invest. And I mean, I don't care if that's what you want to do it. I agree with Emily. What she said is debt is a tool, and I've been on both sides of it. I've used it very poorly and I've used it well. And every once in a while you do both still, but it's just like people get really up in arms talking about Dave Ramsey. And I'm not going to lie, if I want to create views on YouTube, just knock something Dave Ramsey says, and then all of a sudden everybody comes out to defend him.
It's funny is like once in a while I'll put something on Facebook like that I know is wrong, because firefighters and cops are the first people to be like, no, that's not right. And I'm like, if I want to get views, just say the wrong thing or say something controversial.
Yes, so go check out Aaron on Facebook and Instagram, and he's always stirring stuff up there.
I try to put educational stuff out there too.
No, you do. You make people think. I mean, that's definitely. I think that's what it's there. You're there to have fun, also cause some trouble, but it's educational. But yeah, to Dave Ramsey, I think definitely, like a lot of people are agreeing how Tyler put it, very undergrad versus grad level. How I do think for a lot of people though, they have to get those steps down. His first steps, right? So it is super helpful, and for a lot of people it might be the best path for them if they're not going to put in any work to, like you're saying, understand about money and how to invest, right? So for a lot of people, it is beneficial. It's just, as we're probably, we're kind of, we're probably seeing how the country's going, what direction. There's those that have assets and those that don't, and the wealth gap is separating and dividing people. And going down that Ramsey path and just focusing on that is definitely going to probably put you on one side, and definitely make life a lot harder, I think, in the future, right? If that's the one thing you're focusing on. So I think figuring out how to invest, like you're saying, Aaron, how to make money, right, is really what's going to put you in a different position. Yeah, I don't know. You guys got anything else? Anything fun you want to talk about? I know before we wrap things up.
I have a question, because this is not related to what we're talking about, but you guys talking about posting stuff just to kind of get conversation going. And I know there's whole pages. I can tell by how they're posting that they're just trying to rage bait, because then you get the conversations in the comments. How do you not? I've gotten better as I've been on social media for longer, but people are so mean. Do you just not care? I mean, because I'm like, if I get controversy on stuff and they're like, oh, you did that wrong, I'm like, no, I did it this way because this is my, like, there's certain ways you have to frame in certain climates, right? And so I had this one page post that blew up and people were like, this dumb bitch, because I'm a female in construction. And I'm like, yes, if you're building in Colorado, it'd be like this, but we're building in Wyoming. And I knew I did it right, but still I'm like, these people are being mean. Do you just not care?
I don't care, because they'll say stuff that, like, if I post about interest rates or something, that they're going to disagree with me. And like, I desperately want to be like, okay, please explain using the property that you own.
Yeah.
And I guarantee that they don't own a house.
Yeah.
And so I just think of it, I've been told you're never going to get hated on by somebody doing more than you. And that's just where I leave it now.
True.
I disagree with
and
that.
You have no feelings being in the fire department. If you have feelings in a fire department, you're in big trouble. So we lose our feelings when we get our job. Most of us, at least.
I don't know. I got a baby at home. So like if I have downtime, like I'm giving the bottle to sleep on me, I'm like, let's talk shit. Let's get it out. Because I think once in a while you need to have a good, like, fuck you conversation with somebody. And I think it releases all your stress and you make you feel better, right? So like, as long as it doesn't come to like shooting each other, then it's fine. Whatever.
Oh, it stresses me out so bad.
But you gotta understand, like, these people, like, if they're spending time watching your page, they're getting you views, they're giving you content, they're giving you reactions, they're promoting what you're doing, right? So, I mean, there's a lot of stuff I'll say. It's like I said before, like, I don't know everything, but I stir the pot and I poke a lot. Like, if you look at my page right now, there's people who are arguing on the 800 or the $200 billion. Fuck Trump. The only way is going to Venezuela and blah blah blah. And like, with how about, like, this doesn't have to do with this. Like, come on. But like, I'm like, but at the end of the day, like, they're not going to impact me. They're not going to do anything to me. They're not going to. They have no bearing on my future. And like, honestly, if they don't like me, fuck them, because they don't make my life better or worse. They're just somebody who's it's just noise on the outside. Once you realize most people are just noise, these are things that one thing I've realized in my life is that, especially with social media, because I came up in like the what's the game, the Ozark Trail game, not the
Oregon Trail.
Oregon Trail. Yeah, like, so that's where I came up in, like, Oregon Trail. Like, that was the game, like, we played. And now, like, kids are on their headsets and talking shit the whole time. Like, internationally, like, people are making fun of people's accents in Russia and China. And man, at that point, it's just noise. It's just, you don't care about people because they don't give a fuck about you. And this is actually part of my presentation, is that the only people that matter are the people that care about you or love you, or the people that want something or need something from you. Once they stop wanting or needing something from you, if they don't care about you or love you, they're gone. So fuck them. I'm definitely getting Marc canceled. I'm gonna try harder next time.
No, but Joe V says the only one who cared what people say are firefighters. The only one who cared what people say are fine. They cry all the time.
That's a,
Neck,
you're
chest,
trying too hard, Joe
maybe
V.
you
You're
get
trying
that.
too hard, bro.
Is he joking? Because like my husband used to be a state trooper, and so whenever
Yes.
we see the firefighters, he's like, the real heroes are here. Like, so maybe it's a friendly rivalry coming from Joe. Maybe
It
he's
is.
It is, yeah.
Yeah.
No, he was in law enforcement in Chicago, or and
Okay.
so he's in, but he's in
Wisconsin.
Wisconsin now. Yeah.
Yeah, that's why he didn't make it, and like he decided to leave there because he couldn't take it because he was crying all the time. If he came to the fire department like out of work then, or initially, then he wouldn't have these problems.
Stephen P is a retired FDNY. He just joined the
Yeah.
school community, but he says, "Hey Emily, just go hang out with a bunch of firefighters on a regular basis because our whole day is breaking on each other."
Exactly.
Steve needs to join the First Responder Financial Freedom. We got a couple of FDNY guys there. I didn't realize how big. I was talking to one of my buddies, he's a lieutenant up in Harlem, last week. I didn't realize how big FDNY was. So DC, we have about 1,800 members, about 1,500 operational, and he's lieutenant in Harlem. And I was like, what's your promotion process looks like? And he was like, oh, they have like 1,500 lieutenants in New York City. I was like, that's the size of our entire operational organization. So they have like 10,000 members. They have a small army for the police and fire.
Is my mic? Oh, Stephen, if you're still here, there is the First Responder Financial Freedom on YouTube, their podcast, Aaron's Instagram. I'll put Tyler's one there because Tyler's also with Maltese Mortgage, right, Tyler? So where are you able to lend? Or
Any state pretty much as far as DSCR investor type loans, and then California and 6 other states for residential mortgages. But yeah, I've expanded to go nationwide for fix and flip and DSCR, and then my private money is still in California.
all right, nice. All right, any final words then? This is always fun. Like I said, it's always fun getting Aaron on. It's very informative every time. And I don't know, if any final words from you guys?
No, thanks for having me on.
Oh yeah, you guys know Brian, right? Brian Waters will be joining me on Tuesday. Wait, is it Tuesday? Yeah, Code 3 Investing. So he'll be on. He's another firefighter out in Los Angeles. So he'll be joining me on Tuesday.
Ask him about that video his crew made of him.
I will. All right. Is it gonna get me canceled?
All the ones where they're giving him a hard time about his coaching stuff and like
yes.
Firehouse.
Oh, that's right. That
he used our engineer sticks that we used to drive and get ready to drive for the test. And they put like "Welcome to Brian Waters Real Estate Seminar," and it went the whole way into his station.
That's right. I saw that one. Stephen, if you're here, looks like if you're on Facebook, they also have a Facebook group. So go join that, First Responder Financial Freedom.
We need to get back into podcasts. We're all busy. I mean, everybody has kids and stuff going on. We need to get back into podcasting. This is the first one I've done in probably a year. I think the last one I was on was actually with you, Marc.
Wow.
I just missed Joe V so much I had to hop back on today. That's what it was.
Well, Emily's going to be in Vegas. I know Tyler is talking about coming for some of the meetups. Aaron, will you be in Vegas for the One Rental at a Time event in February?
I don't know anything about it, so probably not. And I have kids, and I hate Vegas. I love Red Rock Canyon, so if I go to Vegas, it's the hike.
Oh, yeah, Joe's not going to be there too, he said, so you're not going to miss anything. All right, everyone. Thanks for tuning in. Have a great weekend, rest of the week or start of the weekend, and I'll see you folks tomorrow actually for my Bitcoin weekly wrap up. So thanks for doing this, guys. Okay.